I am excited to be able to present on our flagship Cerro Blanco gold project, which is located in southern Guatemala. So I will be making forward-looking statements throughout this presentation, and please, on the corporate website, you can access this presentation and read through these notes later on. A little bit about the corporate structure of Bluestone Resources. So we are listed on the TSX Venture Exchange. We're currently trading at about $1.80 Canadian, which gives us a market capitalization of just under 260 million Canadian. And we've currently got 45 million US in the bank, which will comfortably get us into next year when we look to get ourselves into the next phase of the life cycle for our Cerro Blanco project. This is a Lundin Group company. So the Lundin family is the largest shareholder at 26%. We also have our partners at CD Capital as loyal shareholders. Most recently, we worked with them on Lundin Gold, bringing the Fruta del Norte gold project in southern Ecuador from late study phase through development and into operations. And I was working on that project prior to joining Bluestone in January of 2020. We've got significant analyst coverage here with a target price of around $4.30 a share. So a little bit of the history on Cerro Blanco before I get into where we are standing today with the project. This deposit was discovered in 1998, and in around 2002, Glamis purchased the project and moved forward with a pretty extensive drilling campaign. And in 2006, Goldcorp purchased Glamis outright, and they quickly advanced this project to be permitted for an underground development scenario with about 72,000 meters of drilling contributing to that plan. Since then, extensive drilling and remapping of the geology has been undertaken. And when we picked up the project in 2017 for a price tag of around 20 million US dollars, we then began to further enhance our understanding of the geology by continuously drilling out the deposit from surface and from underground, as there is currently 3 kilometers of underground workings in this Cerro Blanco project. In 2020, I came on as CEO and brought with me the project team that was tasked to really bring forward this project, the underground concept, through basic engineering and develop an execution plan for the development of an underground scenario. However, with the successful drilling that we were able to achieve in 2020, where we drilled over 15,000 meters, as well as the opportunity for us to take a minute and pause and look at all technical and social aspects of the project, we decided that we would undertake an advanced study to test the viability of an open pit mining operation here at Cerro Blanco. So over the next several slides, I'll bring you through the genesis of how that came to be. And hopefully you'll understand that we have really been able to maximize the value of this project and why we are dubbing this Cerro Blanco 2.0. Before I get into the economic numbers, it's important to understand the geology of this project. So this deposit is a low sulfidation epithermal gold deposit where the gold and silver is locked up in quartz veins. And we define it as an upward flaring vein array. I know that sounds technical, so you can look at it from a cross section looking north as essentially the mineralization forms an upside down cone, and mineralization does go to surface. The high grade veins are classified here in this block model in situ by the pink coloring of over 10 grams per ton. And it is held within a low grade mineralization envelope that does again have mineralization to surface. And when you look at the geometry of this deposit, it definitely shows that it's amenable to surface operating methods. Equally, we were able to increase the measured and indicated resource with an open pit concept to 3 million ounces of gold as compared to the 1.4 million ounces contemplated with the underground scenario. We still will be able to access all of that high grade core with an open pit. And therefore, for us, looking at this project with a surface mining method concept is a no-brainer. And we definitely believe that we have the understanding here in Guatemala and the strong engagement with the authorities, both local and national, that we can bring this project forward and maximize benefits for all stakeholders. So this is why we're calling it good to great. The underground project, while it was a very high margin, robust underground concept, we now have a great high grade open pit mining method that we'll be able to bring forward in an efficient manner, given all of the history that we have and the team that we have in place ready to move this project forward. But essentially what we've done by going from the previous project to this optimized one is we've more than doubled the resource and production. And because of the technical challenges that are now effectively removed from an underground development scenario, we are essentially tripling the value of this project from 300 to 900 million US dollars after tax at a net present value with a 5% discount. The new production profile is being presented here on this slide. And what we're contemplating now is an 11-year mine life capable of producing on average 230,000 ounces of gold per year, as compared to the underground, which was an 8-year or 9-year mine life capable of producing around 110,000 ounces per year. So we have more than doubled the production. But what's really attractive here for us is those first years. We can reach plateau production of over 300,000 ounces of gold in years 2 to 4, as you're seeing in this slide. And during those years, assuming a $1,550 gold price, we can generate over 300 million in free cash flow. So very significant improvement to the economics as compared to the previously contemplated project. As well, because of the near surface mineralization and the grade and the orientation of the deposit, we are still in the first quartile all-in sustaining cost category of around $640 per ounce all-in sustaining. This is a snapshot of the results from our preliminary economic assessment on the Cerro Blanco project. Initial capital of around 550 million. And given that we have now been able to double the gold production and triple the silver production, we are now looking at a project of around 900 million net present value after tax, again, assuming a 1550 gold price. What that translates to is around a 2.6-year payback and an after-tax internal rate of return of around 28.5%. As you saw in the previous slide, our peak production is now at over 330,000 ounces of gold. As compared to the underground concept, we were capped at 150,000 ounces of gold. So more than doubling our peak production with this new development concept. So how do we stack up amongst our peers now that we're considering us, with a new lens, new project, and technically reduced a lot of the risks? We wanted to see how does this open pit stack up against a new basket of peers. So on the top chart, you're looking at a bar chart with the circle showing the strip ratio and the bar chart showing the head grade. So because this near surface mineralization, we were able to have a low strip ratio, meaning less earth needs to be removed to get into that pay dirt. And our head grade on average will be around 1.6 grams per ton gold. And in those initial years, it's above 2 grams per ton. So a significant increase in the project value when you're looking at it from an open pit strip to a head grade, mill head grade. This lower chart here is showing the average annual gold production in the bars, and the circle, the gold circle, is showing current market capitalization. So we are currently trading around 0.3 times net asset value of the underground project. And given that we just tripled the value of this project, and our peers are generally trading at around 0.4 times net asset value, we definitely see some upside potential for the share price and for this company to grow and really match what our peers have been able to achieve in these last 18 months. So what are the next steps? For us, it's very important to continue to engage with the local stakeholders and put forward our training and local procurement programs and continue to work with the Lundin Foundation to set up training, local hiring, local procurement, and plans for economic diversification as well. Not everybody in the community will want to work from the mine, but we will do our best to make sure that we're maximizing the benefits for the local stakeholders, as well as the shareholders of Bluestone Resources. We are going to continue to drill the surface, the near surface area of this deposit. So we will be updating our resource on the open pit that will feed into a feasibility study. We currently have a program of drilling about 5,500 meters, and that will make its way into this resource. We intend to complete the drilling by May, and that means that we can update and bring this PEA level into a feasibility study by the end of 2021. And in parallel to that, we'll be putting together our environmental impact assessment, which is to be submitted before the end of this year. And all of the information that we're collecting now with our social and environmental baseline data gathering, coupled with the technical data in the feasibility study, will ensure that we have a robust EIA permit process. And in parallel to working through both the technical and non-technical, we'll be working with our project finance team to put a project financing package in place next year. As I mentioned, we currently have $45 million in the bank, which will comfortably get us into 2022. But we look to capitalize on all of the work that we've currently undertaken, the strong project execution team that we have on this project, and we are hopeful that we'll be able to get ourselves into the early construction phase by the end of next year. So with that, I'd like to thank everybody for letting me participate in this forum. And if there are any questions, either now or at the end, I'd be happy to answer them. Thank you.